Good morning, welcome to the market view for Thursday the 15th of May 2014. And starting off with the 30-minute chart, we can see that prices moved sharply lower during yesterday's trade, unfortunately, on the unemployment news figures, which is slightly odd when you consider that according to the news sources, the UK unemployment rate fell to a 5-year low, which is good news, and the pound moved lower. To make matters worse, Carney spoke at 11 a.m. and the market then moved lower again, came back up, and then traded back to the downside. And that's no doubt in part to what he said about in no rush to actually increase interest rates, which contradicts what he said in August of last year. When he said if unemployment drops below 7%, and yesterday it came out at 6.8, he would have to consider increasing interest rates. So somebody else, politician, bankers, whatever, making statements that they never actually honour. So this is why the market did what it did yesterday, and then after, of course, it did absolutely nothing, so not giving us the opportunity to take advantage of a trade back to the upside after shaking out to the downside and just languishing really for the remainder of the trading session, and that's the way it's been on the overnight as well. So there's not a lot we can actually do about that. The market started to move higher. It met resistance at the resistance 1 level, and then it was down on the good news. So work that one out for yourself, because I can't either. It's typical of the markets. What you think is good news, it reacts badly to, and vice versa. And then, of course, it's justified with the reasons why the market moved to the downside, not the real reason, like we had a big sell order in for the pound and any other reason. So that's why the market moved lower yesterday on good news. In the daily chart, let's see if we can get some sort of clarity of where we actually are in the bigger picture. We've come through the 16827. I'm just going to delete that for the time being. This will give us a clearer picture. It's also going to just spread out the bars a bit so we can see where we are as far as this pullback is concerned at the moment. Obviously, the market's finding support to the left at 167.56 there, and then of course you've got 167.50 where the market traded down to yesterday. So you've got this support over from the left here, and you can see the market trading at that at the moment. Should the market move lower, then the next downside low is going to be here up to the recent high, and this is the sort of area of where you can expect prices to move to. You've also got a low. Let me just extend this to the right. You've got the low here as well, which coincides with the 62% retracement, and of course this low coincides with the 76 as well. So these two areas of support happen to be fib retracement numbers as well. So make a note of these areas of support where the market could actually trade to. So a breakthrough first is going to see 167.17 as the downside target. And also if this one's broken, we're heading then to 166.54 and 55 there. So amazing really how this has worked out for giving the downside targets. Now, what if the market is to move back to the upside, as we've had so many down days at the moment? Let's just have a quick look, and what I would do is start with this bar, its high and low, just to give me an indication of where prices could move back to the upside. So 168.27 and 168.44 is the potential upside target in the short term there. Let's have a look at the news, see what's could move the markets today. Let's just get rid of markup and navigation, and let's have a look, see what we've got today for the UK. There's nothing that I can see, just the Eurozone there. So it's the weekly unemployment claims for the For the US, they're at 130. We've got CPI out at 130 as well. This is one you don't want to be in for in the US, although saying that when you look at the CPI figures, they've not really altered an awful lot during the last, blimey, since 2008. So, you know, we're heading for 6 years now. And again, it's only because the figures are being fiddled. They take out most of the products that have inflationary components, i.e. food, and this allows you to massage the figures and suppress the figures and then keep them down at these ridiculous levels that we know that nobody in there, as far as their shopping bills are concerned, whether it's here in the US, are actually seeing these modest increases. In fact, it's closer to 15 or 17%. So sleight of hand there by the government, but then again, nothing surprises me with any government anymore. And then what else have we got later on? We've got the Philly Fed Manufacturing Index at 3 p.m. I'm not too concerned about that one. And that's it for the news, really. That's about it. Right, and that's it for today as well. All things being equal, I will see you in tomorrow's market view. As ever, thank you for your support and also for watching.